We're now going to talk about Chapter 4, which starts on page 25. It's all about saving. Perhaps you've heard of this as not an uncommon statement that says pay yourself first. Paying yourself first means doing it before anything else gets paid. Let me just take a step back and say that saving doesn't preclude the fact that you need to take care of your needs first. You've got to take care of what you need to survive before thinking about saving. It's kind of a catch-22, you want to save, but you also need to take care of your needs. But the concept of paying yourself first, first of all, what's good about it is that you can decide how much to save. That's really based on your own situation. Now, experts say that you should try to save 10% of your income, at least 10% of your net income, gross if you can. But you decide how much you need to save. But then the next thing is, what are you saving for? Saving is great just to save, but it gives us a little bit more motivation if we can write down a reason why we're doing this. It makes us, gives us a reason, gives us that target on our money map, so to speak. So savings goals, we're going to take a sidebar here. This is not in the book, but just talk a little bit about how we set some financial goals. Financial goals should be what's called SMART, or SMARTY in our case. Okay, so first of all, the goal should be specific. For example, I want to save a month's rent in my emergency fund. That's very specific. It should be measurable. How much do you have to save? Well, if my rent is, $600 a month, that's the target amount that I need. There has to be action associated with it. You have to do something. It just doesn't happen on your own. I have to save, or I have to make some other changes in order to free up that money to save. It has to be realistic. Hey, I want to save, $1 million by the time I'm, 5 years from now. Well, that's not realistic because, come on. We work for the state. I didn't say that out loud. Okay, that was Holly Chase talking. But really, seriously, it's got to be realistic to what your situation is. And then it has to be timely. Put a time frame on it. Otherwise, it's just kind of hanging out there somewhere. There are 3 sort of guidelines for time. Short-term goals are those that you can achieve within a year's period of time. Midterm, somewhere between 2 to 5 years. And our example here for short-term is saving for an iPad, midterm, saving for a car. And long-term, those are the savings goals that take more than 5 years. And it doesn't always have to be a savings goal. It can be just a financial goal. Maybe it's paying down debt. And lastly, that why. Make sure that it's your goal. We see this a lot being from a housing agency. We see a lot of, sort of the theory behind, well, we want a bigger and better house, but, it really doesn't show that way in our money map. So, if people are encouraging us to do things that are beyond our, what we really want or what we really believe, we have to pull that back and say, make sure these goals are our own.
And I would think with your customers, there's going to be some cases where there might be a parent or guardian overseeing the person with the disability saying, you need to do this. So I think it's even more critical to think about the fact that the customer needs to understand why it's important, but if they're not buying into it, they're not going to meet the goals. So that's a critical part of it.
Okay, so here are some tips. I got a couple of pages of tips, but I think they're important to discuss. Really, how do we go about this saving and how can we free up those money? Think about, again, what are your wants? Can you do without any of them? Or could you cut back on the coffee that you buy every day at Dunkin' Donuts? What about putting saving as an expense in your money map? Okay, it can be a regular expense. Saving, there it goes. Next, how about try putting $1 away every day? Or take the loose change in your pocket at the end of the day and put that away. That maybe sounds easy to do, and it really pretty much is if you have the habit of doing that. Look for things that are on sale and save the difference. If you save $5 on a purchase, you were going to spend $20 on an item and you got it for $15, take that $5 and save it. But seriously, do it. Look, shopping at thrift stores or garage sales, love that, very popular today. Shop at the dollar store, and again, make sure that you're doing your comparison shopping and try to save the difference. Some other tips we have: break those expensive habits, like excessive clothes buying, shoes buying coffee. I think if we can just, cut down on them, because it may be important as part of your money values to do these things. So you have to, balance out what's important versus what your goals are. Okay. When you make a purchase, send in any rebate forms. Just sent one in for wine, but I didn't say that out loud. Have your employer automatically take part of your paycheck and put it into a separate account. Most employers are requiring direct deposit these days. You deposit some into your checking, and how about taking $10 or $5 and putting it into a savings account?
I was going to say, as state employees, too, we have access to deferred comp, which the minimum contribution for deferred comp is $5 a paycheck, and most people won't even feel that. So that can build up over time. So I encourage you to look into deferred comp if you haven't.
And then look at any automatic savings plans from your bank or credit union. They may be able to put, money goes into your checking account into the same kind of thing, transfer X amount over, once or twice a month or with every pay. So there are a lot of good tools out there. We just have to investigate and see what's available to us to make savings easier. And then last but not least, put any tax refund, raise, or bonus into savings. And, just put a portion of it. If you put 30% of your tax refund in it, hey, that's great. If you put 10%, that's great too, because at least you're doing something.
Right. As we know, with your customers, there are savings limits in place. If you've got someone who's receiving Supplemental Security Income, or SSI, there is a $2,000 limit to how much somebody can save. That's an asset limit that does not include a house or a car. But we want to make sure that our clients or customers do not go over those limits when they're saving. With some of the waiver-based programs, there's an $8,000 limit. Again, not including a house or a car. And I think you're all pretty familiar with some of these. But we have a couple new vehicles as well. There are some great ways for your customers to save and not lose their benefits. The first one is the Plan to Achieve Self-Support, or PASS accounts. These are accounts set up through the Social Security Administration, and they are allowed to, customer is allowed to set aside money for a specific goal, and it's for work. It needs to be for a work purpose. So maybe it's to get a modified van, maybe it's to get a screen reader, maybe something like that. And this is not counted against SSI. There are special needs trusts that can be put in place for a person by friends or family. Those need to be set up by an attorney who has worked with special needs trusts. They're very, very tricky little beasts. So you want to encourage somebody, if they want a special needs trust, to work with a lawyer that is well-versed in special needs trusts. Those trusts can be used for big purchases, not usually day-to-day expenses, but that can be a vehicle, when set up properly, that is not counted against the limits with SSI or some of the waivers. The next one are the IDAs, the Individual Development Accounts. These are matching programs, usually, and I think it's through United Way and CFED, the Corporation for Enterprise Development. They do matching programs. So if you've got a customer who's saving money into an account, it'll be matched by these other programs. It helps people save. There may be some requirements with those, such as you have to get financial education to make sure that the customer is actually going to spend the money appropriately, or there may be a promise you have to sign off that you're going to make regular contributions to the IDA. So there are rules around those, but again, those don't end up counting towards the limit. And then in Pennsylvania, the latest, well, it's nationwide, but in Pennsylvania, we have the new ABLE Act. And we are hoping to have this implemented through the Pennsylvania Treasury Department by the end of the year. These accounts are fantastic in reaching the mission that we have here of getting more of the disabled community back to work or working and able to save more. These accounts allow the disabled to save up to $14,000 per year. So if they are working and afraid of going over those limits currently, very shortly there will be one more new vehicle that will not count against those limits, and it allows people to save for the future, maybe save for that house that they would not have been, because if you can only save up to $2,000, you're never going to get anywhere in trying to save for a house down payment or things. Well, I shouldn't say never, but it's going to take a lot longer to get to the goals. So these ABLE accounts are going to be fantastic. Pennsylvania Treasury Department has a website for these that they're giving out updates as they're working on implementation. But currently the goal is to have these up and running before the end of 2016, so that if people want to fund them this year, a family can give to them, and of course you yourself can set them up for yourself if you're disabled. So the Achieving a Better Life Experience accounts coming soon. We have other work incentive programs here. It always pays to work, and of course, again, we're moving towards getting more people employed. the Social Security programs make it possible to work while still receiving some benefits. So if you've got somebody, a customer who's currently receiving benefits, but they want to try to go back to work, if they're getting SSDI, there's a trial work period. They get to try for a few months and see if things are working out. There's also an expanded period of benefits. If for a couple months things go great and they're over the limits and they don't need to get the SSDI, but then there's a month where they don't receive quite or make quite enough money, then they still can get that SSDI. So that's a really great trial and error program to make sure it's working for the participants. And lastly, if someone comes back to work and within 5 years realizes their disability is keeping them from working and they have to go back on benefits, there's an expedited reinstatement process. So they don't have to fill out all the same paperwork if it's been within 5 years. So obviously the government is trying to make it easier for people to get back into the workforce and be contributing citizens. Very similar under SSI, the continuation of benefits goes on for a little while unless you go over the maximum amount you're allowed to earn at the job. There are a deduction for work expenses related to the disability. If somebody goes out and purchases a screen reader or something to that effect, that you can deduct that money of the cost of that equipment before your benefits are looked at as far as the income limits. And then lastly, again, there's expedited reinstatement. If someone finds they've returned to work and their disability is preventing them from doing what they really want and they can't do it, there's no tons of paperwork to fill out a second time around. So there are a lot of incentives to get folks back to work. Understanding some of these work incentive programs, there are a few agencies, you're probably all familiar with them, that help counsel your customers. These are the WIPAs, the Work Incentive Planning and Assistance Offices. They can help an individual understand the specifics of these work incentive programs that are out there, figure out how work may affect you, SSI, SSDI, health insurance, things like that, other public benefits. And lastly, they can also help understand the services provided by you all at OVR. There are 3 WIPA offices in Pennsylvania. Again, you probably are familiar with these, but in case you're not, here's the websites and the phone numbers for all 3 of them. There's Western PA, Southeastern PA, and then Central and Northeastern. So bookmark those websites if you haven't already, because they can help your clients and customers.